This is Quant Trade Edge, and this is a very early wrap-up for Monday, April 18th, 2022. This morning we posted a video about crude oil and the Taylor count and how we didn't think today was the day for a major breakout. It had made this high and we were down here, and we thought that we could go up as high as 108.75 to test that daily swing high, which is right here. And we did go make another high, stopped a dime short of that, and we're just chopping around sideways. And this is the day I would expect to get the most we can to the downside, but I don't expect it to be a lot. And taking it back to a 240, if we were to get something like this, a nice little pullback, perhaps to this prior swing high of 105.59, that would be a great place to look for a divergence or something to enter, or we can always catch the breakout to the upside. The most exciting market this morning was copper. Let me take these away because they're getting a little busy. But on the 240-minute chart, we have this trend line that was breaking in the morning, and this is the swing high that we would aim for initially, and that's 486. We have not yet gotten there. What's nice about this pattern, this is a big sloppy bar, but when you take it down to a 5-minute, we had a vol compression pattern. And this is not your standard vol compression pattern because it's not like a cup and handle. But the way I look at this vol compression, and first if you check the statistics, you'll see the ATR3 divided by ATR20 did get down to under 0.5, which is a very good level for a vol compression pattern. And also volume-wise, if we go back to here before we knew what was going on, when we just saw this sell-off is on good volume. It's pretty much around the same volume as the open on Friday and the close on Friday, I guess noontime pit close on Friday. And then all of a sudden, the greens dwarf these previous reds. So on this side up here, we did get a lot of positive volume, tight compression. And the way I look at this is think of it as an arm wrestling match. If you're trying to go in the up direction, somewhere here you purposely give way and let the other person push you down, only to catch them by surprise and push them right back up. And when you do that, one, you catch them by surprise, because this was something you had planned out, but then you also demoralize them because they went from a position of thinking they were winning to a position of surprise, realizing that they've lost ground, and that's just my mental model for this particular pattern here. So just wanted to show you on this pattern. This was something I had noticed around 8:20 before the open, and I posted a chart here, which I don't know how big it looks. It might look a little small here, but this was before it had broken out, and then it basically broke out. And my comment is that the congestion here can get a good breakout with a tight relative stop. And basically from this level, this was 4R. Using the bottom of this congestion pattern as the stop and the top as the entry, we already got 4R. And then watching it in real time, you'll notice certain things that could also help you catch that top. And one is there's a volume divergence here. Let me get a trend line. This high, one, this high here, and this high, each was made on lower volume. So this was actually the highest volume of the push, which is the breakout bar, which is good. But then you had two lower volumes, so that's a sign of a short-term divergence. And then also on the 2-minute, if we put up let's focus on this RSI, we didn't get this on the 5-minute. On the 5-minute each, I don't know what that is. On the 5-minute, each of these things was actually higher, but on the 2-minute we did get a pretty clean divergence between this high and this high. And furthermore, if you just follow the structure, and we can put our bars back on there if that makes it easier, our Gann counting bars, and you notice that we had an A be C on a 2-minute. So breaking below this was a 2-minute U-turn, which also going back to our Taylor lesson from this morning, and this is just a microcosm on a much shorter time frame on a 2-minute chart of the market cycle. We had the trend break. So we had a trend break, we had a U-turn. This U-turn gave us a little bit of love, but this is a 2-minute chart, and this 5-minute and the 15-minute and everything else is fairly strong on copper right now. So this U-turn basically gave us an opportunity. This area here gives us an opportunity to take profits. I mean, one, either you got it at 4R or you saw the divergences on the 5-minute volume or the 2-minute RSI, or you waited all the way for a U-turn. But any which way, this helped you reload again lower. And the reason you reload lower is just that the stop to this level now is worth it, given that our target is 486 up here. So that's a good 2.5, 3R to do that. Or you can really even just use the bar itself. Although this is a one-legged pullback, you could use the bar itself as a stop if you want to have less risk on the trade. So let's move on to natural gas. That's another exciting market. And on this, we had a very clean two-wave pattern. Let me put and on a runaway market, the 10-period exponential, works. You don't have to use a 20. But on this 3-minute chart, we had this ABC, and it went and got a marginal new high. And then if you look at this as a two-wave pattern, you got this ABC where this is a higher level, and then we just topped right up here around 788. This bar here got 4R around 782, which is right here. If you've been watching it on a 5-minute, you got the same pattern, and this is what I call the tight, tight 2E, where it just flips, to get your pattern in consecutive bars, then ideally even breaks out on the next bar. This would have given you a slightly higher bar, but your 4R on that is 789, which is just a penny above where we've gone so far. So, natural gas, again, it's a runaway freight train, something that, every day there's probably a good setup just given the volatility in it. And then one last thing I'll look at is in the S&P 500, this was the pre-market. Friday was options expiration, and with options expiration, on a week options expiration, there's often a little bit of follow through. Because if you think about anyone who was short a put and there was kind of a surprise move at the end of the day, closing on the lows, there might be a handful of people who didn't realize they got exercised, and they wake up Monday morning realizing they're long stock they didn't expect to be, and they have to just go dump it. So there's often a little bit of follow through on Mondays to a week Friday options expiration. And this is an hourly chart, and early in the morning, this is 7 p.m. This high over here is 1 a.m., 2 a.m., 3 a.m. We got an ABC structure on the 60-minute. So when this broke out between 6 and 7 a.m., that was a good point at which to get some follow through, and we did. And looking at a 15-minute chart, there was a good-looking bald man pattern right here. And what I liked about this pattern, again, is, from our anecdotal review, going from below a key level, like below 50 to above 50 on the setup bar, to me, makes a bald man pattern more effective. And it was in this case. And something else I just noticed, and I put it down to review later, is I know I haven't made all that progress with the umbrella pattern yet, but on this umbrella here, you would typically want a move up to get in. That would be your breakout. So this isn't a failed pattern at all, but sometimes, if people get a little ahead of themselves and enter a pattern before it actually triggers, there's a good flush. And this just gave me the idea to actually look for that as a pattern itself, meaning you could basically trade the umbrella either way. But again, that's still very new, so I just want to take a look at that. This is how I observe things over time, put them on a list, and eventually go back and look at a bunch of charts, and eventually go back and program something, and eventually find these edges, this little toolbox of edges that I've developed over the last 25 years. So that's it for today. I have to leave early, so not sure how this day is going to turn out. I'll see if I can get in early and do a pre-market tomorrow get everyone back up to speed. But for now, that's it. I'm signing off. Please click the like button and subscribe. It really helps me push this content out to more people and hopefully help people get on the right side of some of these moves.